want to bring in Mark Lane now. He's an analyst at William Blair Company. He has an outperform rating on Morgan Stanley and says he sees a lot of value in the stock, and we are seeing that today. A lot of investors agreeing with you, Mark. What do you make of these numbers? I mean, overall, hard to find some negatives here.
Well, yeah, they're the fifth large trading firm to report, and relative to expectation, I think the trading results were actually quite good. $3.7 billion in trading revenue, more than 10% above our estimate, which is very different than what we saw at Goldman in particular yesterday. So the upside relative to expectations was driven by that better trading execution and also enhanced profitability in the trading business as well.
Yeah, but I mean, they are benefiting, though, aren't they, from their business model where they're relying more on wealth asset management and less on trading, though?
Well, I think that's actually a little bit of a misunderstanding in that trading is still the predominant driver of Morgan Stanley's business. For instance, $1.6 billion in pre-tax income within their institutional securities segment, less than $300 million in global wealth management. So the Citigroup, the Solomon Smith Barney joint venture was a big transaction. It sent a signal that they are going in a different direction than the rest of Wall Street. But the reality is that trading still is the key driver of their business, at least in the near term, until they can enhance the profitability and take cost out of that joint venture.
Okay, so it's still the bread and butter. Mark, though, I mean, after these results, with Morgan Stanley sort of capping all of this, what do you think the bankers are worried about for the second half? Is it about hitting those revenue targets?
Yeah, the market has been so volatile, and the economic outlook is so ambiguous. I think that clients, both from an M&A perspective and also from an underwriting perspective, are very engaged. Backlogs have been increasing. Dialogue is very high. There's a lot of pent-up demand to raise capital and complete transactions, but there's this lack of confidence because of the outlook in the economy and the volatility in markets. So we need some stabilization in markets. We need some increased confidence for this backlog to come through.
Yeah, and you did hear David Viniar yesterday in the call and also with reporters saying that, look, it might be the European stress tests that bring back confidence in the markets. Who knows? I know we're all sort of grappling for that. Mark, I've got to leave it there, but good to talk with you. Mark Lane, the analyst at William Blair.